Hello everyone, welcome and thanks for watching the Market Report. This is Marcel Pechman, analyst and writer at Cointelegraph. This show debates the most pressing topics impacting the crypto market, and it airs every Tuesday on the Cointelegraph Markets and Research YouTube channel. There's a lot happening this week with the CPI inflation, the Hinman documents on Ripple XRP case, besides the recent court battle between the SEC, the regulator, and Binance and Coinbase exchanges. Let's start by the CPI inflation data, which came out on June 13, so this morning in the United States, showing that inflation has slowed for the 11th straight month in May at 4%. Even though prices increased, it came lower than the previous month when the price increased 4.9% in April. Remember, 4% inflation is still way above the 2% target from the Federal Reserve. Tomorrow, on June 14, there's the FOMC meeting, the Federal Reserve Board meeting, where Jerome Powell and friends will decide on the interest rate, which has been currently set at 5%. So basically, the Federal Reserve has been increasing the interest rates, making the cost of capital more expensive, so people and companies and families don't get so much access to credit because they're trying to wind down inflation. So they're trying to cool off, to slow down the economy. But according to the CME FedWatch tool, 94% of the market expect no changes, so zero changes on the next Federal Reserve meeting on June 14. So anything apart from that, if the Federal Reserve increases by 0.25% basis, 0.25% for instance, will cause huge volatility because no one is expecting. Jerome Powell has been saying that they are thinking about doing a pause, which doesn't mean that the rates won't go up higher anymore, just means that they'll pause for 1 or 2 months until deciding on what to do. So anything outside of pause, so unchanged rates at 5%, will cause huge volatility, including in the crypto markets. So watch out for this event tomorrow on June 14. We'll then proceed to the first article of the show, an article written by Tom Mitchell-Hill. All of the SEC claims fail. Binance US rebuts motion to freeze funds. Binance US has asked the court to deny the securities regulator's proposed temporary restraining order against its assets, claiming that the move would effectively end its business. Okay, so for those unfamiliar with the case, the SEC, the regulator, is on court against Binance and Coinbase on allegedly offering security tokens and servicing US clients without a proper broker license or registration. There's also the question regarding the tokens that the SEC claims to be securities, including BNB, Solana, Cardano, Polygon, and Algorand. But what is a security anyway? A security is a tradable financial asset. Okay. But in a financial context, a security is a certificate or another financial instrument that has monetary value and can be traded. So these definitions are kind of broad, kind of general, because they have been written over 50 years ago. So in practice, securities are generally classified as either equity securities, such as the stocks and derivatives contracts, and debt, which includes the bonds and corporate debt. There's nothing specific to crypto in that regulation, so it has always been a gray area. That's, of course, apart from Bitcoin, which has been deemed as a commodity by the CFTC, which regulates commodities markets. It might look like the SEC is alone in this fight, but that is not the case, as you'll see in the next article. Now back to the Binance US case. In a June 12 filing, Binance US slammed the SEC emergency motion for a temporary restraining order on its business, calling it draconian and unduly burdensome. Basically, Binance is fighting back, saying that it has complied to hundreds of thousands of requests from the regulator on its day-to-day operations and has been cooperating with the ongoing investigation that started in late 2020. Additionally, the regulator accused Binance CEO Changpeng Zhao, CZ, of being able to access Binance US customer funds and alleged that he moved $12 billion in Binance funds through a privately controlled entity called Merit Peak. There's a big issue here. Binance US never had $12 billion worth of deposits, so this statement cannot be true. Moreover, Merit Peak is a market maker controlled by CZ, but still an independent business. It's pretty standard for a market maker to move thousands, if not hundreds of thousands of dollars every day, both in cash transfers and in stablecoins. What the SEC needs to prove, if that's even possible, is that CZ has been commingling funds, meaning Merit Peak had access to clients' deposits on Binance US. But unlike listed companies, Binance US doesn't need public accounting, let alone something audited. That is why it will be very hard for the SEC to access any internal data that would prove eventual wrongdoings. I'm not versed in regulatory matters, but today's hearing will be important not only for the Binance US, because Binance saw its volumes plummet in the US after they lost their banking partner months ago, back in February. So fiat deposits in Binance US were no longer enabled. But the relevancy of this case, if the regulator at the SEC scores a victory, is because it will open room for further action, where the Department of Justice could chip in and force Binance banking partners to open more data, which in turn will likely spell some of the secret dealings or eventual mismanagement of client funds. For now, there's no mention of possible impacts on Binance international operations. My best guess is that US citizens will be banned to access their services and risk hefty fines or even jail if bypassing restrictions through VPN. But that court ruling could take a couple of years. The biggest short-term risk, in my opinion, is that clients that have cash deposited US dollars deposited at Binance US. Right now, they can buy crypto, usually at a premium, and withdraw from there. Or they can stay with the money there and risk getting their funds held up for months, if not years, until the court clears their decision. So if I had money deposited at Binance US, I would buy Litecoin or Bitcoin or Ethereum or some stablecoin and withdraw the money. It's not worth the risk of having it stuck there for months or years. Presently, I see no risk, zero risk, of Binance US clients being rug pulled or facing losses, even if there's a stronger intervention by the regulators. The funds are there, the money exists. Just to highlight, that's my own personal opinion, does not constitute investment advice, nor reflect Cointelegraph's official view. On to the next topic, we'll cover the latest news regarding Gary Gensler, an article written by my friend Derek Anderson. Breaking: US lawmakers file SEC Stabilization Act to fire Gary Gensler. US Representative Warren Davidson has introduced the SEC Stabilization Act into the House of Representatives, announced on June 12. One of the bill's main provisions is to fire SEC Chair Gary Gensler. Davidson said in a statement, US capital markets must be protected from a tyrannical chairman, including the current one. That's why I'm introducing legislation to fix the ongoing abuse of power. The bill would remove Gensler from the office and redistribute the power between the SEC chair and commissioners. It would also add a sixth commissioner to the agency. It looks interesting in theory, but Gensler was not elected. As per the current laws, he could only be removed from the position if some kind of wrongdoing is effectively proven, which doesn't seem to be the case. The two congressmen behind the bill are notoriously pro-crypto and unlikely will get their support. You've got to consider that the US government is pushing the Operation Choke Point 2.0, and the SEC is not alone here. There's a clear effort to suppress the crypto industry in the US, although we don't know precisely their motives. For instance, this could have been orchestrated by the finance industry, a lobby, so to speak. We'll never know the whole picture, but the point is the SEC is not acting alone or going against the recent actions from the CFTC, the Department of Justice, and the New York Department of Financial Services. Therefore, in my opinion, there are zero odds that the proposed bill will be even voted on the lower house floor. On our third and final topic for today, we'll discuss Ripple's ongoing battle with regulators. Ripple CEO Hinman docs are well worth the wait. Brad Garlinghouse hinted that the eagerly awaited Hinman documents, which detail internal deliberations by the SEC staff, could tip the court battle in Ripple's favor. The Hinman documents refer to the internal SEC messages concerning a 2018 speech given by former SEC Director William Hinman. In the speech, Hinman said that while cryptos such as Bitcoin and Ether might start off as securities, it is possible for them to become something more akin to a commodity once they become sufficiently decentralized. Many Ripple advocates believe that the imminent unsealing of the documents will prove instrumental in finding further insight into the legal status of Ripple's native XRP token. Believe it or not, this SEC case against Ripple started 2.5 years ago. Ripple has been trying to get a hand on SEC internal communications that culminated with a speech of securities transition to non-securities after becoming decentralized. But take a step back for a moment. Even if those emails mention Ripple and XRP as a perfect example of how to detach a company from a token, that was 5 years ago. No sane judge would consider a few SEC employees or directors' opinion from that era to rule whether XRP is presently a security. It just doesn't make sense. I know there are many XRP fans out there, and I hate being the one to tell the ugly truth, but XRP would not exist if it's not for Ripple, the company, marketing and financial support. It doesn't matter if the validators are independent, because the entire development of the distributed ledger and partnerships, they have been managed by Ripple's employees, by Ripple Company. Furthermore, Ripple has an ongoing program to sell XRP tokens to fund the company's maintenance costs and bonuses. That's clearly a security. No email or communication from 5 years ago will change that. Again, that's exclusive my own opinion, which might not necessarily reflect Cointelegraph's official view. Well, that's it for today. I hope you enjoyed the show. Don't forget to visit Markets Pro, the professional Cointelegraph alerts platform. Our proprietary indicators have been giving profitable alerts for months. There's a 20% link in the video's description. See you!